Hey, good morning, everybody. Welcome to the Daily Market Report brought to you by Mike Bjork. Today is December 23rd, Monday. We got a few economic news releases. It's only this week. It's basically today and tomorrow. Everything's going to be jam-packed. And then we got the weekly jobless claims on Thursday. But the big ones will be obviously today and tomorrow. So let's go ahead and jump right into it. We'll start off with the personal income for the month of November. We had a contraction back in the month of October, so people made a slightly little less, probably a lot of it due to the government shutdown. Projected for November was supposed to jump up to zero point 0.4, and it came up zero point 0.2. So it did go up, not quite as high as expectations or the forecast, but it did go up to 0.2%. And then we got the opposite, people spending, consumer spending for the month of November. So October, we had a lot of people spending up 0.4%. Projection was supposed to be at 0.5, and it came in at 0.5. So it came in at projected. So people made a little less. It went up, but not as much as the amount of spending. A lot of it obviously due to probably Christmas shopping and such. And we got the core PCE. This is the Fed's favorite gauge for the inflation rate, and this is because it's the core. We took out the food and energy in this number. So we had a 0.1% in back growth in October. The forecast is supposed to continue to 0.1, and it basically came in at forecast. So still, inflation is very low, not a concern as of this moment, but still extremely low. The problem is actually it's too low, and there's concerns that it is too low, especially with all the government stimulus that we've been experiencing for for a while here. We had consumer sentiment, and this is the last item here to note. For consumer sentiment, we had 82.5. And back in November, the final revision was actually 72.5. So this is a pretty big jump from the last revision. And the forecast is supposed to climb up slightly, and it came in at basically the final revision for the month of December came in at 82.5. So very good numbers right there. So everything was looking pretty good, except for maybe personal income was okay, but not where the forecast came in at. They made more, but unfortunately not quite as much as we had anticipated. So let's jump over to the headline news. The stock market's up. They like the consumer sentiment. They like the other economic news, especially the consumer spending sort of thing. And we got another item here is Fed member Lacker made some comments. Basically, he's forecasting Fed funds rate to remain zero up until maybe 2015, towards the end of 2015, maybe they start raising it, and he thinks it could be up to 2%. So basically going at 0.25% presently, maybe even zero at some point, because there was talk that maybe they might reduce it, and he thinks it could be by 2015. So basically another year and a half or 2 years, we could see a rise in the Fed funds rate. All right, because remember also when the Fed announced last week that they could be low for a while. So even though they're pulling back on the tapering of the quantitative easing of purchases of the mortgage-backed securities, they're going to keep short-term rates, the Fed fund rates, in this current projection low for quite some time, even well below the 6.5% forecast of the unemployment rate numbers. But again, he's forecasting that it could be by end of 2015 at 2%. So it'll be interesting to see. And of course, there's a lot of variables that could play into it. So it'll be interesting to see if that takes place. Let's go ahead and take a look at the bond market, and we are basically about where we left off on Friday. As you can see, we're basically hovering at the 10-day moving average. We're at the 99.81 where we left off 99.84. So not enough there to make any difference in pricing. So basically the same interest rates where we left off on Friday. So stay tuned. Tomorrow will be packed full of information as well. And the only other information coming out will be Thursday. All right, folks, have a wonderful day, and we'll see you guys tomorrow. Thanks for watching.